you're watching Your Trades on ET Now with me, Shreyansi Singh, and this is the show where we help you make sense of the week gone by and trade today. Firstly, let's talk about the week that we've had because it was quite a roller coaster week, and despite that, we did manage to end it at a very good note. It was a truncated week, of course, when we ended up snapping that 2-week losing streak coming in. As far as the Nifty is concerned, mainly led by IndusInd Bank, Axis Bank as well. Those are the two counters to look at. Helping the Nifty as well, and the Nifty mid-cap, of course, also snapped the 3-week losing streak. That was also something that we saw coming in. There's some strength that we saw coming in as far as the broader markets were concerned. So Nifty small cap as well, that's the one that was advancing for the second consecutive week. And Nifty Realty was the top sectoral gainer for the week, snapping that 3-week losing streak as well. Nifty Realty is the one that you should be looking at, and Nifty Bank as well, snapping that 2-week losing streak. Like I mentioned, IndusInd Bank and Axis Bank, quite some strength that we saw coming in as far as those counters were concerned. But of course, you did have India's CPI also easing through that 6-year low coming in of 3.34% in March. So that is also something that you saw coming in. As far as that handover coming in is concerned, lower food prices is something that you were looking at as well. And in Indian IT, of course, kicked off the Q4 season. You do have Wipro, that's the one to look at because that counter was taking it on the chin today after that weak guidance that was in fact shared. And there's of course a whole host of counters that we're looking at when it comes to the IT pack, and that is something that we're definitely looking at, Snehi. Of course, we do have a good set of gains that we've in fact managed to eke out as far as gold is concerned, because that one was shining quite bright as well.
Absolutely, while commodities and all have done pretty okay, the one spot of solid bright, if you could call it, over the course of the week has been Nifty Bank. Look at the run-up we've had just week to date, 6.5% uptick coming in on Nifty Bank. Roughly 170, 180 points away from touching its all-time high is where we have closed on the Nifty Bank, and looking very solid for Nifty Bank as well over the course of the week. And other than that, also the focus was on names like HDFC Bank, ICICI Bank, because other than being earnings candidates as well, these stocks have hit their all-time high in today's trading session as well. So looking rather good for a bunch of these PSU as well as private sector banking names. Moving away from that, let's talk about the US-China trade rhetoric. That's something that we have seen play out over the course of the week, because on one hand, you have China saying that they're open to having negotiations with the US, provided US maintains some respect and they mutually sit and negotiate and sort out their tariffs. Because remember, at one point in the trading week, US had imposed tariffs as high as 245% on China, to which China retaliated and said that they're finally ready to come to negotiations, provided that this is fair for both the sides. And today as well, China's come out with a statement saying that they're open to negotiations and they're keeping normal communication with their US counterparts, provided it is done mutually and respectfully. So that's another headline coming in over the course of the day. IT, of course, as Shreyansi mentioned, has been in the sector in focus. You have earnings candidates over the course of the week into the weekend as well. Mixed guidance on the back of that. Wipro was a stock that was taking a beating in today's trade. But while we are talking about what happened to Wipro here, globally as well, Wipro ADRs were down and out. And while we're talking about global earnings as well, ABB parent, the ABB global parent, has come out with a phenomenal set of numbers. On the back of that, ABB India was holding up firmly, an 8% uptick coming in this week for ABB India, and anywhere between 4 and 5% uptick coming in on the daily basis for that stock as well. Other than that, it's been a pretty good trading week for our market. There is no complaint. Absolutely, because all sectors on a weekly basis have ended in the green, with Nifty FMCG being your least gaining sector. That's still an uptick of 1.5%, and Realty, like Shreyansi mentioned, a 7% uptick coming in. But on that note, let's welcome on board Rupak De, Senior Technical Analyst at LKP Securities, and we also have Mayuresh Joshi, Head of Equity at MarketSmith India, joining us to make more sense of what we can expect headed into next week. And Rupak, first I'm going to come to you, and good afternoon to both of you, and thanks so much for joining us. Rupak, coming to you first, let's talk about the kind of levels that we're expecting to see on the benchmarks over the course of next week, given that we have yet another truncated week coming in. Some global markets are also closed on Monday on account of Easter. Amid the global volatility, everything that's been happening, at least if you could give us a sense of the kind of levels that we can watch out for on Nifty and Nifty Bank, because stellar run-up across both of these indices over the course of the week. How sustainable is this looking on the charts?
So last few days has been fast and furious. When Nifty added about 10% in the last few days, and giving a breakout above the previous two swing highs, swing on a closing basis. So overall sentiment looks very positive, and till the time Nifty remains above 23,300, the sentiment might remain positive, and buy on dip strategy will be favored. And on the higher end, Nifty might move towards 24,100. Once again, if Nifty sustains above 24,100, then it is likely to move towards 24,550. So overall sentiment looks positive till the time it is remains above 23,300. For Bank Nifty, I would say that Bank Nifty found resistance around its all-time high. And however, the sentiment looks very much positive. It has closed 6 months high, more than 6 months high. So the sentiment remains positive till the time it is remaining above 53,600. And on the higher end, if Bank Nifty moves beyond 54,500, then further firework might be seen in the short term.
Well, there you have it. So that's the take coming in as far as Nifty and Nifty Bank then are concerned. Mayuresh, tell you what, I'll take it across to you. First of all, thank you so much for joining us on the show. I wanted to ask you about the IT pack, because that is the one that is in focus going into the weekend, right? We do have earnings. We had Wipro reporting their numbers, and it was the guidance for the first quarter that was quite mixed. That is something that the stock was taking a beating because of. And you do have that entire pack that is in focus. What kind of next moves do you pencil in when it comes to this entire pack? Are you penciling in a rebound? Do you think the worst is over when it comes to some of these IT counters that we've seen taking it a little bit on the chin?
Good afternoon. No, I think two aspects. One, I think in terms of numbers, a large part of the market expectation was soft numbers to be reported for IT companies. And they have started on a soft note. TCS numbers were soft. Wipro has given a soft guidance. You obviously also have seen Sonata give a soft guidance as well. So I think the uncertainty that's looming in terms of discretionary spending, specifically in North America and Europe, two of the biggest regions, to probably meet out orders. And the pricing of these orders as well. I think that is creating a huge element of uncertainty as far as forward-looking earnings are concerned. And let's not forget how the margins will probably play out. Even if orders start coming through slowly and steadily over the next few weeks, next couple of months, I think pricing of these orders is going to be extremely critical in the environment that we are operating out of. Obviously, what happens with tariffs for certain sectors, what happens in tariffs in general. And again, I think these macro headwinds might probably indicate that the expectations in terms of an earnings recovery might actually get delayed by at least a couple of quarters. And again, valuations a tad bit even higher in terms of the standard deviations over 2 to 3 year time period. Therefore, my take is that wait out for numbers. There might be a few outliers out of the entire pack. But generally, I think the expectation is a very soft and sluggish quarter for IT companies, and soft and sluggish commentary related to all these headwinds that they're facing. So I think we're doing a wait and watch for the sector as a whole. We're also having a look in terms of how global IT companies are going to profit numbers, and they'll probably take over this thing all the same.
Thanks for that take coming in. In fact, I want to come back to you with an overall outlook on this quarter for FY25 earnings season. While we have seen a mixed bag from two of these IT companies so far, going ahead, where do you think, or rather which sectors do you think are going to have a stable earnings season? Where are you seeing some re-rating, and where, if at all, are you seeing some earnings upgrades in this earnings season right now?
So honestly, I think domestic focus sectors might still continue doing well. Obviously, I think a few sectors that have been on our radar where earnings might actually hold up, where the relative strength has held up for these sectors compared to the overall market, even in the fall that we probably witnessed over the past few months. A few sectors which stand out probably seem to be from the domestic pack. Now, within the domestic pack, I think agrochemical companies, fertilizer companies are probably strongly placed as we speak. Expectations again, a decent monsoon expected. They are out this time down. And expectations in terms of strong volume growth, strong farm gate prices, input costs remaining stable, a large part of their operations being backward integrated, make us and lead us to believe that earnings might probably hold out. where other sections of the market might have very volatile earnings moves. And this earnings might actually continue over the next few quarters, looking at how the monsoons and the expected Rabi season might also play out. So I think fertilizers is one space where clearly earnings and the relative strength is holding out. Within healthcare, hospital stocks are where I think the earnings are also holding up. I think what you've probably seen as a testimony in Q3, a large pool of the hospital stocks where the asset-light expansion has happened, which means they've probably entered into agreements with third parties and expanded their bed capacities to a large extent without taking too much of leverage on their books. As the occupancy improves over the next few quarters, the fixed cost absorption will largely take place as well as the operating cost. And therefore, operating revenue for average revenue for operating bed, the average record take margins should relatively hold out as well. Third, I think banks. I think it's a consensus call that most analysts have on the street, but selectively within the space itself, banks, stroke NBFCs, our take is that relatively numbers should be better. The expectations in terms of an interest rate cut in the second half as well would probably augur well in terms of how NIMs and spreads are expected to play out. Obviously, I think deposit growth is normalizing to a large extent, and therefore the CASA deterioration that you've probably seen for the system as a whole probably might start stabilizing and show signs of improvement. A large pool in terms of delinquencies have largely been addressed, both in terms of slippages and the restructured book, and therefore provisioning remains extremely strong. So selective banks might actually do well as well. And a few select capex-oriented stories, where our belief is that with the government capex continuing strongly and expected to continue strongly, consumption coming back, and expectations of private capex coming back, certain capex-oriented stocks might actually do well. And let's not forget part of consumption at the lower end, which might include your footwear makers, apparel makers, might also start showing earnings respite as we head into the second half, both with tax cuts and expectations of a rural recovery.
And I wanted to take it forward with the point that you've just mentioned, Mayuresh, when it comes to apparel, when it comes to some of these other sectors as well. Rupak, I wanted to take it across to you and get a sense of what you think about the FMCG pack, because there's lots of moving parts when it comes to the tariff story, right? There's a lot of tariff commentary that we've seen come in with regard to containers, dry bulk shortage also getting a little more acute is something that we're sort of penciling in at this point. What do you think about the entire FMCG pack in that light then?
So, FMCG after prolonged underperformance, I think they are getting ready to perform well. In the short term, I think there is a resistance for the index. 56,700 would be the resistance for the index. If the FMCG index moves beyond 56,700 decisively, then the performance from the space might be expected on the higher end. 5-10% kind of perform upside movement on stock basis we can expect. However, for the midterm picture is not that good at the current juncture. We need to go for short-term positioning in the stocks and wait for further clarity on the FMCG front.
The take on FMCG. And Mayuresh, coming to you, just want to get a quick sense on where you are seeing valuations headed now, because we've seen a steep market correction a month or so ago, and ever since then we've only seen a one-way up. In fact, last couple of weeks also trading has been phenomenal for our markets, and we've erased all of those tariff announcement losses also that we had seen initially. So what are you making of valuations in the market now? Do you believe that the correction has been significant enough for major stocks to be valued appropriately, or do you also still believe that valuations are still stretched to some extent?
To a large extent, I think valuations are fair. So it's not too expensive. It's in no certain ways very, very cheap as we speak. And therefore, I think expectations in terms of how earnings will play out specifically for the next financial year is going to be extremely critical. Now, base case scenario for next year's earnings, assuming how earnings are played out for the last fiscal, seem to be downgraded to a large extent. But with consumption expected to make a comeback, with government capex, as I just mentioned, expected to remain strong, some elements and signs and green shoots of private capex coming back would largely indicate that a few domestic-oriented sectors might actually start performing well. Now, even on the export front, if you leave aside services, a large part of the tariff negotiations that are expected to happen across the globe. And if India probably remains a little bit better positioned as we are at the current juncture, there is hope that even exports outside services might actually stabilize going forward as well. But I think that's a question mark that nobody really knows, that one really has to ponder on what the Trump administration will or will not do. And therefore, I think earnings might just take a hit uh, as we end this year. So basically, Q4 numbers will be soft. But expectations of a slow and steady recovery as we hit the first half, and a significant recovery at that as we hit the second half, might actually be on the cards. Again, I think with whatever is happening in the US, the expectation largely is that even if there is a base case scenario for a mild recession building in, emerging economies might actually see some element of flows coming in from the FPI/FIIs. And I think very few countries within the emerging economies might actually do well. India might actually stand out among them. So I think earnings expected to show a significant amount of bottoming out in the first half of this year. And significant improvement in the second half. So I don't foresee any significant earnings cut happening on an FY27 basis. But again, I think fair levels at what the Nifty and Sensex are trading, and therefore we must have a sector and a stock specific approach in this market.
Take coming in as far as some of those tariffs are then concerned. But tell you what, Rupak, I wanted to get an understanding of what you think about the auto pack as well. What do you think about Nifty Auto as well? Against the backdrop of the announcement that has come this week when it comes to the pause coming in as far as auto tariffs are concerned, that is something that US President hinted towards. He wants to be helping automakers and car makers at this point. He's also indicated that he wants to provide some semblance of resilience to some of these companies as well. So against that backdrop, what are you making of the entire auto pack as well? Rupak?
So, Nifty Auto has formed an interesting pattern on the daily chart. I think there might be some recovery in the auto stocks in the near to short term. On the daily chart of auto index, I find that the auto index has formed a positive divergence on the RSI, and it is likely to find a very minor resistance around 21,550 kind of level. If the index moves beyond 21,550, then there might be some significant rally towards 23,000. So I expect a sideways to positive movement in the near to short term.
Rupak, also share with us the picks that you have given at the moment. What's looking good when it comes to the stock-specific front? Where are you seeing some pockets of value?
So I have two stocks to share. First one is Eternal. The stock has given a falling wedge breakout on the daily chart, and the indicator RSI is indicating a positive momentum in the short term. On the higher end, the stock might move towards 245, and a stop loss can be placed below 220. The other stock would be GICRE. The stock has been recovering in the last few days, and it has been sustaining above the important moving average. And I think 470 might be the target, and keeping a stop loss below 417.
Eternal, erstwhile Zomato and GICRE looking good to you, Rupak. Mayuresh, just want to come to you and get your sense on where you think FIIs are positioned in a market like this. Because, you know, last couple of trading sessions, we've been noticing something very interesting, that while DIIs are selling now, you have FIIs that have made a comeback into the market. Do you think this trend is sustainable going ahead, given that we're once again on a solid footing? And also on the tariff front, India seems to be relatively sheltered against other Asian markets, and also between the trade war between the US and China, India seems to be holding up its front pretty well. So how do you think FIIs are going to approach the Indian markets going ahead?
So I think FIIs two viewpoints here, right? Both from a macro and a micro perspective. So from a macro perspective, I think India still probably stands out compared to a lot of nations across the globe. What we probably got in terms of softer oil prices would mean a softer trade deficit, a softer current account deficit, and therefore that benefits India quite significantly. Outside that, I think if you probably look at the tax collections, they still seem to be very, very robust. And with the domestic economy expected to continue faring well, with all the triggers that I just mentioned, expectations of consumption coming back, so on and so forth. The domestic tax collections expected to be pretty robust as well, which means I think the overall handle that the government probably has in terms of government borrowing, in terms of the fiscal deficit. Numbers probably seem to be on track, where other countries might actually probably struggle. Now, coming back to micros and in terms of corporate earnings and how they're expected to play out, as I just mentioned, the expectations in terms of bottoming out in the first half of this financial year, Q1, Q2 of this year, might probably start indicating that the second half, if the entire trend continues, might actually be better off for India Inc. And if that probably starts playing out well, I think across economies, we probably start tracking corporate earnings, barring a few sectors. You're probably expected to see better earnings growth as well. And therefore, from a macro and a micro construct, India probably seems to be better placed compared to most players outside at this juncture. So outside the US, I think if investors are probably looking at which market might probably do well, with the impositions on China, I think the entire China trade, which happened a few months back, I think there might be some question marks around that and the sustainability in terms of how the economy might actually fare over the next few quarters. That question marks itself, along with expectations of where to diversify outside the US over the next few months on both these global macro headwinds and otherwise. I think money flow from FPIs, FI should start coming back. And therefore, I think India might probably become the best performing market as we speak, as we head into the second half of this financial year.
Mayuresh as well as Rupak for joining us and helping us understand, make sense of the week gone by. Even though this was a truncated week, quite the week that we had coming in. But with that, we're completely timed out on this edition of Your Trades on ET Now. But as we bid you goodbye, let's go across and listen in to what the finance minister then has to say, because you do have the legacy of Asia's oldest stock exchange that we're talking about.
It is your service to the nation in terms of holding up the markets and also giving a very influential sentiment to impact the Indian economy, which is going to be looked up to. And therefore, my good wishes that you succeed, prosper, and make an impact on India's wealth creation. It's a great matter of pride. And also, both the speakers before me have mentioned as to how under a banyan tree, the Indian, rich in Indian symbolism, a banyan tree prospers, has several roots, aerial roots as well, provides shadow and shade for the birds and animals, and it is seen as that which grants your wishes. The BSE's growth has been so symbolically associated with that one early visionary group of people sitting and meeting under it, which has brought it to this far into the technology-driven age.